Hey everybody, Courtney Smith here with this week's edition of Wall Street Winners. I believe we're the only video newsletter out there. All right, let's get right down to it. I mean, really, once you've read this, what more is there for you to achieve in your life? This is kind of the pinnacle. All right, lots of things happened this week. First of all, we got to break this down. There's a lot of conflicting cross currents in the market right now. So let's take a look. First of all, we had this nice big rally here. This is the S&P. Gap up right here, very important. It occurred on heavy volume. That could be what's called a breakaway gap. Then the market rallied up again, and we got another gap in the last week. So things look pretty good, although as you can see, we never got above the highs. But here's the problem. The volume has gone down. Normally speaking, volume is a confirming factor. So when the high volume breakout occurred here, that confirmed that this was a good gap. This gap on really low volume, showing that it's a faux gap. It's a faux gap. So we can ignore this. And we can kind of ignore this whole rally in the last week because of volume analysis. Second of all, you can see that the smart money shown by the purple predictor have been selling into this rally. This is not bullish at all. However, let's take a look here at the Dow Jones. A little bit better picture. We have the same gap, although the same low volume, so we have to ignore it. But look in the purple box. For the first time since early October, the green line is above the red line. Now, it's only above it microscopically, so let's not get too carried away here. But the point simply is that buying pressure has come back into the market and is now essentially the equal of selling pressure. That's the first time we've had that in a long time. And notice that the Dow went above the high we had made in mid-October. So a little bit more bullish picture for these big Dow 30 stocks compared to the S&P. Well, what about the NASDAQ? The NASDAQ is the weakest of the bunch. We got to stay away from those stocks. Notice that the high here didn't make it above this high here. So in the Dow, it easily surmounted this high. In the S&P, it matched the high. And in the NASDAQ, it didn't even get close. Also, purple predictor, negative here. Now, seasonality, have to still call it neutral. Remember, there's no real bearish seasonal period during the year. It's either neutral or bullish. We're in a neutral situation. Now, I'm going to use this green line right here to be my flip point. If we can close above this level right here, which is about 159 on the IWM, I'm going to switch my seasonality indicator back to bullish. We're in a period where we're supposed to be in a bull market. From basically September, October to May is the normal bullish period of the year. Well, as you can see, the price action is not confirming that. Well, we can only do what the combination tells us to do. In other words, we have to have bullish seasonality and the market has to say, yes, it's in effect. Right now, the market's saying no. The normal seasonal bullishness that's supposed to be here now is not here now. So as a result, we have to say that seasonality is neutral. Now, according to Stock Traders Almanac, this should be a fantastic period. Even according to Ned Davis, we're supposed to have this one last dip here in late November and then take off. So dip, let's call it into Thanksgiving, then a rally after that. So I think that the Ned Davis scenario still looks like the best one. Now, the yield curve, we always look at it from two perspectives. The perspective where the yellow line is tells us what the market's going to do a year from now. This is a one-year leading indicator. And as you can see, it's, a normal yield curve, no big deal, which the way I interpret that tells me that nothing big is going to happen. But I have to always look in the lower right-hand corner because that is something that is also of concern. Now, when we see this indicator get low, that's bearish for the market. When we see it high, that's bullish for the market. In this case, it's a minor negative. It's no big deal. The thing that concerns me is that you can see we're at 85. If we got down to 25, I'd be saying we're looking for a bear market. So right now, no bear market, but I'm close enough that I'm nervous. Let's put it that way. Now, asset allocation showed that a lot of money came out of the bond market and into the stock market. So that big rally that we saw was coming from bond traders, not from stock traders. So that's maybe why what happened was bond traders came in, sold their bonds, bought stocks, but the smart money in stocks sold their stocks to the bond traders. That's what's happening here. These kind of insights, you don't get any other newsletter in the world. This is the only one where you can get that information. Now, in addition, you can see that generally this week, our stock market risk indicator was roughly sideways, which means that they didn't really want to take on any more risk. And on the other hand, they didn't want to head for cover either. Global shares, who cares? Really boring. I'm not interested. The U.S. stock market is where the action is, maybe the Chinese market. Okay, so bonds were basically low. We broke to a new low on this whole move just at the tail end of the previous week, which shows that bonds are under pressure, which means that interest rates are going higher. Now, the bond key factors, I just jumped to this. Let me show you what's going on here. The green line shows bond interest rates, or treasury note interest rates to be precise. And you can see they've been kind of staying up over here. You look over to the right-hand side and you see it says 205. What that really means is 2.05%. Now, the next indicator under it, the chart itself, is the CRB index, which is a leading indicator of interest rates, and it's suggesting lower interest rates coming up. We then go to the blue line, which is 10-year treasuries in Germany, the biggest competitor to the U.S. treasuries. It suggests that interest rates should go lower. Finally, gold, which had rallied up, is now hooking down. We kind of have a preliminary estimate that our bond key factors are suggesting lower interest rates. So let me go back to this chart here. Is this the low? Well, we can't say for sure. It's a little too early to say. The purple predictor is still a little bit negative, but notice there's no downside momentum. We had heavy downside momentum in September and October, and now no downside momentum at all, which of course is the precursor to a bull market. So we got to keep our eyes on this. A bull market would certainly help the stock market because it would mean there'd be lower interest rates. Now, another key development here was the U.S. dollar. Now, we talked a little bit about it a week or two ago, but I'm reevaluating it here. Take a look at what's happened. This is what's called a head and shoulders bottom. We have a left shoulder over here, we have a head here, we have a right shoulder here, and this basically horizontal green line is called the neckline. We broke out of that in late October. We rallied up, totally normal, and then we came back. Now, we did break below. That's not really what you look for in a head and shoulders, but we've gone right back up again. So let's preliminarily say this is a legitimate head and shoulders. Well, if it is, then we should see something on the order of 200 to 300 pip rally off of this breakout. And so let's say it starts at 96. We should get up to 98.50, 99. That's a big move in the dollar these days. That would be a strong bull market in the dollar. All right, gold, on the other hand, if the dollar's strong, then gold is weak. And so I had been getting a bit bullish. Never did buy gold. Now I'm getting more and more bearish. I think we're going to break this yellow line on Monday or Tuesday, and gold's going to start to go back down. Let's take a look at our key factors in gold. Up at the top is the euro. Let's call that one slightly bearish. The middle panel is the CRB, commodity prices, clearly bearish. And down at the bottom, perhaps the most important one, is the yen, the green line, and it's clearly bearish. So it looks like our three factors are either bearish or slightly bearish. So I got to get back on the bear train in gold. Now, oil, as I had mentioned the last several weeks, I had turned bearish, and it's continued to move lower. The bearish situation, we're going to find out a lot this week because Russia and the Saudis are getting together, and they have very conflicting ideas of what they want to do. The Saudis are talking about cutting back production. The Russians are saying, no way, Jose. They need the money. They need the money, so they don't want to cut their production at all. The Saudis need the money too, but not as much as the Russians. So it seems to me that we might get a rally here in anticipation of some type of a production deal and then start to head back down. Bitcoin, an interesting story developing here. Notice the purple predictor has really gone up. I'd mentioned this a couple weeks ago. The purple predictor is leading this market back up. We're very, very close. I mean, look, first of all, it's been a dull market now for weeks and weeks and weeks. I mean, like boring, boring, boring. Right now, I mean, you got to obviously give the benefit of the doubt to the people who don't care because the market's going sideways. But the purple predictor is moving up pretty sharply and giving a little bit more emphasis on the bull side. I don't have a position in Bitcoin. I'm just going to follow the breakout from the blue lines. So that's about 6120 and 7400. If we're inside that range, I'm going to do a whole lot of nothing. All right, everybody. Happy Veterans Day. And we will talk to you next week. I'm at the Option Success School right now in Las Vegas. Very exciting. We're going to finalize the dates on the Extreme Profits course in Dubai coming up and post a bunch more new courses. And of course, make sure you've got that and make sure that you are a subscriber over at Stock Butler because that's where we get all our super cool trade ideas for our fully paid up members. All right, everybody, that's it for me, freebies. We will check you out next week. Fully paid up members, hang on just a second.